Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the dollar, gold, miners, and all fun things. We're looking at a strong dollar, relatively speaking, of course, strong today, but still in a downtrend. So we had the inside candlestick with the range to be watching, and we did break the high of yesterday only by a couple pennies, not too convincing, but obviously that's a solid bull candlestick. And I'm watching the lower high pattern on the daily, which we need to break 101.02 to break the lower high pattern. So the bulls still aren't there yet. We had a nice healthy consolidation period on the hourly, a little lower high and lower low. Then we formed our higher low and higher high, but we are still meeting that resistance from the high of yesterday. So we're right at that level. Currently, I've got it at 167. That's the highest candlestick that closed on the hourly yesterday. And we're right at that level here again today with a tightening range. So we're going to see either a clear break or a pullback in the very short-term future in the next couple of hours. But even if we do see a break, it's all about 101.02 resistance. So the dollar bulls are trying to mount a bounce, and we're seeing gold now pull back. And we had a double top at the high of yesterday and the high of today. So putting a resistance line there that was at 1244.56 and then 1244.34. And then we broke the higher low pattern with this pullback here. And look at how this price action has gone with this resistance line. And this is why I love charts. So we had a multiple top here with this resistance line. We can call it 1235, just a nice round number. So multiple rejections. We broke above it. We consolidated, back tested it, and held it, and then broke out to the upside. So that was a nice test of resistance. Got above it, back test as support. Then we fell through it. Look at the bounce attempt. The bounce on the dump, rejected from that line. So this line has come into play now almost a dozen times in the past 2 days. 1235 is now an important level going forward, so I'm going to leave this line right here on the chart because it definitely resonates with me with how much the price action has played around with it. So now we're looking down at support levels. We just dumped down to 1225.98. The next support I'm looking at is the low of this consolidation, 1221.50, but it's a clear bearish reversal candlestick on the daily time frame, rejecting from that little double top. So we need to keep in mind the overall trend on this bounce of where we're coming from. I have an uptrend line hitting the low of that last consolidation. We could pull all the way back down to about 1215 and still be holding that uptrend line, but we could pull all the way back down to 1190 and still be holding this higher low pattern. So keeping in mind that even if we do see multiple days of red in a row here, the bulls are still in control. Remember, we had 3 days of red, we established our higher low, and then we continued to the upside. So this is day number 1 of a pullback, and the question is going to be how much downside are we going to see? And that's going to be gauged by the amount of volume and how these candlesticks close on the daily time frame. So bears are in control of the short term. We've got these miners losing their upper Bollinger Band, so we had a couple bearish reversal candlesticks in a row. Now we finally confirm them on increasing bear volume. So a bearish reversal doji, we started today with the upper Bollinger Band as resistance. We rejected from that level by 2 pennies, and then we pulled back and closed near the low of the day. And we even lost the 200-day moving average support. So this is telling us that profit taking and consolidation is coming, especially with the increase in bear volume. So the next support I'm looking at on GDX is down at 24.62 and then down to 24.21. So the bears are in control of the short term. Looking at the weekly time frame, there's a bearish reversal doji, and we'll be watching to lose the higher low pattern every single week on this bounce that's played out so far. So we're going to watch that bearish reversal doji for potential confirmation next week. And looking at GDXJ, it's pretty much the same story. Losing the upper Bollinger Band as support, closing near the low of the day, increasing bear volume. All of today was controlled by the bears. And the next supports I'm looking at, there's a little gap here at 39.30, and then another little gap at 38.24. Let's see those GDX gaps. And there's not as many gaps on GDX. So GDXJ has some nice gaps to be watching for key targets and the 200-day moving average of 38.67. Bearish reversal, inverted hammer, rejecting from the upper Bollinger Band resistance on the weekly time frame. And again, same thing with the higher low pattern. We'll see if we break that higher low pattern with further pullback next week. So the bears are in control of short term. What does this mean for our bear miners? It means we're going to see an oversold bounce. So we got dust. You can see the RSI dipped below 30. Bullish reversal, little gravestone doji yesterday being confirmed on increasing bull volume. And we're looking for this bounce to be short term, but the bulls do have momentum in these bear miner names. So I'm looking at 26.54 resistance and then up to 29.15. A nice solid green day again tomorrow will have the bulls with some confidence heading into next week. We've seen plenty of bullish reversal candlesticks on the weekly time frame for these bear miners, but no confirmation. We had a couple bullish reversal dojis. Here's another bullish reversal doji or hammer forming this week. We need confirmation next week to trust that the bulls are going to see a little bit of upside here on this oversold bounce. JDST, same story. Nice bull volume, bullish reversal candlestick, some follow through, close at the high of the day. And the next major resistance I'm looking at, I'm actually looking up at 1714 as a key level. That's pretty far away. Let's look up at 1564 next, and then 1714. And the same story with the weekly time frame, bullish reversal candlestick, but we need to see confirmation, and it's not even really a solid bullish reversal candlestick at this point. We're going to have to see a little bit more upside tomorrow. So momentum has shifted. It's short-term momentum, and your time frame for your trade is going to dictate how you are reacting here. If you are short-term trading, swing trading for a couple of days, this action is going to be enough for you to exit your bull miner positions and either flip over to go into some bear miners or just patiently wait for gold to be done consolidating. So losing the upper Bollinger Band is a signal, but if you're a long-term bull and you're in this for over a month at this point, you're in it as long as the higher low pattern on the daily is maintained, and we really just need to form a higher low compared to 36.08 on GDXJ. So if you're longer term, you got more patient. These little pullbacks that are normal and healthy after a breakout do not scare you. So having your time frame of your trade established beforehand really helps eliminate emotional decisions and making decisions on the fly. Whereas if you're trying to be in gold and miners long term, you shouldn't be surprised that we're pulling back after a breakout. Like I said, that's normal and healthy, but you don't want to be panicking saying, oh, I got to get out now if your game plan is holding for multiple months. So we'll check back in and keep a close eye on things and see how much further downside we have coming with gold. And we're going to be watching to see if the dollar can break that lower high pattern on the daily. I appreciate you watching. Hope you have a fantastic night. See you tomorrow.